Hello, welcome to Ecoholics. This video will discuss certain things about Economic Survey Chapter 2. The name of this chapter is A New and Exciting Bird's Eye View of Indian Economy Through GST. So this is the second chapter of Volume 1 of this year's Economic Survey. Now, the basic understanding behind this chapter is that GST is the main focal point of Indian economy in the last fiscal. So, last fiscal means 2017-18. So, first of all, because in GST is considered as the biggest indirect tax reform since independence, so we'll discuss some of the major things that was highlighted by this chapter. So, first of all, this chapter highlights that after the implementation of GST, there is an increase in unique indirect taxpayer, that is the rate is 50%. So the economic survey says that before the implementation of GST, the total indirect taxpayers was 64 lakh, but after the implementation of GST, this figure increased to 98 lakhs. It means there is an increase of 50% plus unique indirect taxpayers. Now the word arises, what's the meaning of this unique? Unique indirect taxpayers means in the previous regime there was a repetition, because one single trader also registered in many other tax authorities, like one single trader is also registered in excise duty, also registered for service tax, also registered for sales tax, etc. So after implementation of GST, these 98 lakh indirect tax filer are the unique indirect tax. So there is an increase in 50% unique indirect taxpayers. So that is very important in order to increase the tax base of our country. Tax base in simple sense, we can understand that total amount of person, those who are paying taxes to government of India. Now the next thing this chapter highlights, that after getting the data from GST, it was realized that business to business transactions are more. It means business to business transaction as well as exports accounts for 30%. Otherwise we can say that business to consumers transaction is around 10%. So it is a big surprise highlighted in this chapter that this 10% is only towards consumer. It means business houses are trading among themselves. So that's a big surprise for this data. We can understand this like traders are trading with each other. It means there are a number of value addition chains in our production process. So if we implement GST, it will be a better for the government to earn more revenue. Now apart from this, there were few problems before the implementation of GST, like manufacturing state were posing questions that they will lose the revenue after the implementation of GST, because GST is a destination and a consumption based tax. Now the question arises, what does it mean? So suppose for example we have two states, state A and state B. So if the tax is charged on the source, that is, suppose A is manufacturing some goods and services we can say XYZ. So if the tax imposed in itself in the state A, it is known as the source based tax. But suppose this XYZ goods, they will transfer or transport it to other state, that is state B. It means whenever the tax imposed in the state B, it is known as a destination or consumption based tax. So before the implementation of GST, means before July 2017, many manufacturing states were apprehensive about this implementation, because they were thinking that this will lead to loss in the revenue. But government made certain provisions like compensation principle for the 5-year plan. First 3 years they will compensate 100% to all the state by taking the base year of 2015-16, but and the fourth year 75%, the last year 50% revenue will be compensated. So this was the compensation principle, but when we analyze the data of around 9 months, we will get to know that revenue is in the line. So what will we call the revenue neutral rate, so GST is achieved the same thing. Now understanding another thing, this chapter is also highlighted first time in the history of our country, the data given as an interstate trade. So interstate trade, first time we have a data. So there were few surprises, like India's interstate trade is around 30% to 50% of India's GDP. So this is the biggest surprise, that our total GDP, the 30 to 50% consists only of interstate trade. So that's a big surprise for our policymakers, but actually we can say that it is a good sign for our macroeconomic stability in our country. So this is for the first time. Now understanding the interstate trade, they have given also that those states that are exports most are the ones that import the most. So for example, our top 5 state of our country, top 5 state like Maharashtra, second we have Tamil Nadu, third we have Karnataka, fourth we have Gujarat, and fifth we have Telangana. So these 5 states consist of 70% of India's exports. So this is also very important data, that these 5 states consider as the 70% of India's exports they are giving. So that's a very important, and also the data analyze that these states are also the ones that imports the most. So this is quite understandable, because India's exports are generally dependent on imports. For example, India exports refined petroleum, but it imports crude oil. Another example is India exports jewelry, but it imports raw gold. So these are the major we can say sign that 70% of India's exports also dependent on imports. Now this survey also, this chapter also talks about tax base, because states were apprehensive before the implementation of GST. So this chapter also gave the data of tax base. It means Maharashtra consists of 16% of total base of a country. It means Maharashtra is the highest number of income tax failures. Second we have Tamil Nadu. So Tamil Nadu consists around 10% of tax base. On the third we have Karnataka with 9%. Then we have Uttar Pradesh at 7%. And finally we have Gujarat at 6%. So this is the tax base. It means under this we can say that Maharashtra and Tamil Nadu are one of the biggest manufacturing state. It means by giving these data, it is clear that the shifting of tax base from manufacturing state to consumer state is not happened. And in this GST regime, these Maharashtra, Tamil Nadu like manufacturing state are also getting high tax base of our country. This chapter also highlighted one more thing that's very important. It is mentioned there one term known as export superstars. Export superstar. What does it mean? Export superstar means those firms that that disproportionately account for largest share in exports. Like for example, the top 1% firm in Brazil accounts for 72% of Brazil's exports. So here I am writing exports. So in Brazil, 72% of our exports comes from top 1% firms in Brazil. Second, it is given Germany, that is 68% of exports in Germany is contributed by top 1% firm of Germany. On third we have Mexico, 67%, and fourth United States of America, that is 58%. So USA consists 58%, exports comes from top 1% firms in United States. So these are the data. Can you guess some figure for our country, India? So just pause of the video and write it on the comment box, whatever the figure you think that belongs to India's top 1% firm. If you have written the answer, then now the answer is India's export superstar is 38%. It means top 1% firm in India consists of 38% of India's total exports. So that's quite an exception to our country. So we can say that India does not depend on top 1% of the firms in order to export goods and services from India to abroad. Now, apart from these major things, this chapter also talks about formal sector. So for the first time, this defined as a formal sector. What is formal sector? So according to this chapter, formal sector definition is simple. Your firm should be comes under tax net, and as well as given social security to their employees like provident funds. So tax net, if a firm comes under the tax net, like for example GST, and also giving provident fund facility to their employees, it means we can say that the firm belongs to formal sector. If we talk about data, only 8% of India's firms belongs to this formal sector. But some firms comes under tax net but not in social security, or vice versa. So for example, we can say that 87% of India's total firm does not come under formal sector. So that's a big question on our labor security as well as our labor sector reforms. So this definition is very important. Hope you like this video. Stay connected with Ecoholics, and don't forget to like, share and subscribe our channel. If you have any doubt, you can mention in the comment box. If you want that any other topic to be covered in the series of this video, or any other topic related to economics or apart from economics, you can also mention in the comment box. If you have detailed doubt or you want to discuss something, you can also connect to our email ID that is given in the description of this video. Once again, thank you so much. Have a nice day.